You're staring at a blank brokerage account, maybe $500, maybe $5,000, maybe nothing at all. And somewhere across the country, there's a man who turned $10,000 into over $130 billion. Not by luck, not by insider trading, not by some secret no one can access. He did it with a system, a framework, a mindset. But here's the question nobody is asking. What would Warren Buffett do today, in 2026? In a world of AI disruption, skyrocketing interest rates, geopolitical tension, and a market that looks nothing like the one he grew up in? That's exactly what we're going to break down in today's video. I'm not guessing here. I've studied his letters, his speeches, his interviews, and the publicly available moves of Berkshire Hathaway. And what I found will change the way you look at money, forever. Let's get into it. Before we talk about what Buffett would do in 2026, you need to understand what made him Buffett in the first place, because most people get this completely wrong. Warren Buffett bought his first stock at age 11. By 15, he had made more money than his teacher. By 26, he was running an investment partnership that was absolutely crushing the market. He wasn't born rich. He was born curious. He was born disciplined. And more than anything, he was born patient. Here's the stat that nobody talks about. 99% of Warren Buffett's wealth was accumulated after his 65th birthday. Let that sink in. The world's greatest investor is proof that the single most powerful force in wealth building isn't intelligence. It's time. And in 2026, he'd approach this the same way, but with completely different tools. And the tool most investors ignore in 2026? We'll get to that in just a moment. And it might surprise you. Buffett's first and most famous rule: never invest in a business you don't understand. He called it his circle of competence. This sounds obvious, but almost nobody follows it. If you bought a business you didn't understand in 2021 just because everyone else was, you already know how that feels. The hype, the FOMO, the crash. Buffett watched all of it from his office in Omaha, and he didn't touch a single one of those stocks. In 2026, Buffett wouldn't be throwing money at the hottest AI startup just because it's trending on social media. He'd be asking, do I understand the business model? Can I predict where this company will be in 10 years? Is this business durable? If the answer is no, he walks away. Every time. Now, here's the kicker for you in 2026. You probably understand certain industries better than any Wall Street analyst. Maybe it's healthcare because you work in it. Maybe it's tech because you build software. Maybe it's retail because you've spent 10 years watching what people buy. That is your edge, and Buffett would tell you to use it. But understanding a business is only step one. Here's what most people skip, and it costs them everything. Here's the mental shift that separates Buffett from 99% of investors. He doesn't buy stocks, he buys businesses. When most people buy a stock, they're thinking, will this go up next week, next month? Buffett thinks, would I be comfortable owning this company for the next 20 years, even if the stock market closed tomorrow? That one mindset shift changes everything. In 2026, with algorithms trading millions of times per second, with social media pumping and dumping stocks daily, the noise is deafening. Buffett's answer would be the same as it's always been. Turn off the noise. Focus on the business. Ask, is this company making real money? Does it have pricing power? Is there a reason customers have to come back? If you can check all 5 of those boxes, you're thinking like Buffett. But here's where most people mess this up in 2026. They find a great business, check every box, and then they pay way too much for it. That mistake alone wipes out all your returns. Here's how Buffett avoids it. Buffett has one word he uses more than almost any other when evaluating companies: moat. An economic moat is a competitive advantage so strong that competitors simply cannot take your business away from you. Think about Coca-Cola. They don't just sell soda. They own a psychological lock on billions of people worldwide. Think about Apple. People don't just buy their phones. They build their entire lives inside the Apple ecosystem. Think about American Express. Their brand carries a status that competitors can't replicate with a lower price tag. In 2026, the companies with the widest moats might look different. AI is creating new moats. Data is creating new moats. But the principle is the same. Find businesses that can defend their profits decade after decade. That's what Buffett would hunt for in 2026. Now, once you've found a great business with a moat, there's one number Buffett obsesses over that most investors completely ignore, and it's not the stock price. Here's where Buffett's brilliance truly separates from the crowd. He learned from his mentor, Benjamin Graham, that price and value are two completely different things. Price is what the market says a company is worth today. Value is what the company is actually worth, based on its cash flows, its assets, its future earnings. Buffett's entire strategy is built on finding companies where the price is significantly below the value, and buying them before the market realizes the difference. Price is what you pay. Value is what you get. Warren Buffett. In 2026, with markets more volatile than ever, with panic selling driven by algorithms and social media fear, Buffett would see opportunity. While everyone else is running from a falling market, he's loading up on businesses that are temporarily on sale. He's done it in 2008. He did it in 2020. He'd do it again. So what does all of this look like applied to the actual landscape of 2026? Here are the 5 specific moves Buffett would make, starting from zero. Now this is where it gets really interesting, and honestly, this is what nobody on the internet is talking about clearly. Buffett has historically avoided tech. He missed Google, he missed Amazon, famously. But here's what changed. In 2016, he bought Apple. Not because it's a tech company, because he realized it was a consumer goods company with the most powerful ecosystem moat on the planet. He applied the same frameworks he always used, just to a new type of business. So in 2026, if Buffett were starting fresh with $10,000, here's what I believe he'd actually look at. One, picks and shovels of AI. Not the flashy AI apps, the infrastructure behind them. Think companies that sell the picks and shovels of AI, semiconductor manufacturers, data center REITs, energy providers powering compute, and cooling infrastructure nobody talks about. Same logic Buffett used with railroads. Whoever moves the goods wins, regardless of who wins the race. 1. Global payment rails. He already holds Visa and MasterCard. Digital payments are the toll booths of modern commerce. Every single transaction on the planet generates a small, automatic, recurring fee. No inventory, no employees serving customers, just pure volume. In 2026, global digital transaction volume is only growing. 1. Recurring revenue businesses. Buffett loves businesses people literally cannot cancel. Think enterprise software that runs entire industries. payroll systems, healthcare management platforms, logistics software. These are consumer staples 2.0, boring, indispensable, and printing cash every month without asking anyone's permission. 1. Energy transition. Infrastructure. Berkshire Energy is already one of the largest utilities in the U.S. Buffett sees energy infrastructure as the backbone of civilization. And in 2026, that means the grid operators, transmission line builders, and LNG exporters powering both the AI revolution and global energy demand. He'd own the pipe, not the water. 1. Cash. As a weapon. Berkshire currently holds over $160 billion in cash equivalents. Not because Buffett is scared, because he's ready. When markets panic and great businesses go on sale at 40 cents on the dollar, cash is the most powerful asset in the world. He'd tell you, patience is not a passive strategy. It's an active one. These are the sectors. But none of it matters without the one asset Buffett says no one can buy on a stock exchange. Here's what it actually is. Here's the truth. Most finance channels won't tell you. Buffett's biggest advantage isn't his knowledge of accounting. It isn't his access to CEOs, it's his mind. He famously said that investing is simple, but it's not easy. The math is straightforward. The behavior is brutal. Because your brain hates watching stocks go down and does everything it can to make you sell at exactly the wrong moment. Buffett's greatest skill is doing nothing when everyone else is panicking. In 2026, he'd be reading voraciously, 500 pages a day, just like he always has. He'd be studying companies that most people haven't heard of yet. He'd be thinking 20 years ahead while everyone else panics about next quarter. And he'd be doing it with zero emotion driving his decisions. Just data, just logic, just patience. The stock market is a device for transferring money from the impatient to the patient. Warren Buffett. And that brings us to the final question. The one that actually determines your results. Not which stocks you pick, but which investor you choose to be. So here's what Buffett would do in 2026, starting from zero. He'd buy businesses he understands deeply. He'd look for wide, durable moats. He'd pay less than the business is worth. He'd hold for decades without flinching. And above all, he'd protect his mind from the noise. The markets have changed. The technology has changed. The companies on the list are different, but the principles, the deep, timeless principles of intelligent investing, those haven't changed for 100 years, and they won't change in the next 100. Your job right now is simple. Decide what kind of investor you want to be. The impatient one who chases hype and bleeds money, or the patient one who builds real wealth, slowly, deliberately, and with conviction? Warren Buffett made his choice at 11 years old. You can make yours today. If you want to build wealth the boring, intelligent way, this channel is for you. No hype, no shortcuts, no get-rich-quick schemes, just the timeless principles the smartest investors in the world actually use. Subscribe, and we'll see you in the next one.